Hey everyone, welcome to another edition, #AskRobCo with me and James Wild. All good, James?
Yeah, really good, thanks Rob. How are you?
Yeah, really good, thanks. Hope everyone had a good week, receiving some really good feedback, people taking walks, listening to the podcast and people watching the YouTube show and really positive feedback. That really makes me super happy because I love the feedback because it makes everything we do so worthwhile. As you can see, the gilet or gillet, or however someone says it, not educated enough to know the term, is back because the weather is a bit cold. And a funny story actually, I can't remember who it was for the recording team, but I think one of the sessions we did, someone live question was, are you Gareth Southgate's brother or something like that, which always reminds me of the gillet or gilet or whatever it is. So cold weather is back, but we've got some good data for you, good intel. James has got some great info, as always, as we kick on with the last few months of the year and really go deep into property and finance and lending. And let's have the news, James. Let's share with everyone what we've got this week.
Yeah, thanks very much, Rob. So again, it's been a positive week. New instructions up at around 380, actually coincidentally the same as last week. So again, we've got a more positive pipeline of properties which are coming to the market for those buyers, which there has been a bit of a resurgence, especially over the course of the September and as we move now into October months. Sales this week, we've had 220 sales this week, which has been, one of the top sales weeks of the year if you exclude those weeks in the build up to the end of the stamp duty holiday thresholds ending. Obviously, we move now into the week preceding the stamp duty savings completely being eradicated, and we're now at pre-pandemic levels of stamp duty. So purchasers' costs are as they were. Market activity, Rob, we're seeing good activity as we predicted. We're moving through the autumn into those autumn months. So let's see how it progresses in the coming weeks. See if we can sort of hover around that late 100s, 200 sales per week figure.
I think the question for everyone listening, watching, is whether the last quarter of the year or the last few months would be as strong as historical, when generally in the market we close out with the most transactions and the most deals. And the question mark is 2021 going to reflect historical seasonal patterns of trading? And the main reason for that is obviously the huge volumes of transactions that took place earlier in the year because of the stamp duty window. So I think what we are seeing, James, is that everyone loves to get the transactions through at the back end of the year. Money, commercially and residentially, needs to be spent or invested or allocated, and we are well and truly over the summer season. Stock is coming in, and there's been a massive shortage of stock, as we've been saying over the last few months. Stock is coming back strongly, really 4 strong weeks of stock. Which in turn means that we as a business are super busy carrying out all those valuations on behalf of all our wonderful clients. And I expect that to continue throughout October, throughout November, and close out a positive year and really hopefully kick COVID in the teeth and really move forward. Do you see that trend?
Yeah, thanks, Rob. I think, like we mentioned, the autumn vaccines, the sort of third dose of the COVID-19 vaccine, is starting to be rolled out for those which are eligible to it. And, as we sort of move into the winter, we're hoping there simply can't be another lockdown, surely. And the hospital, although the rates are slightly rising at the moment, the hospital and death rates are, falling. We're not at a sort of a dangerous level of sort of which would threaten a lockdown, which I think is the most positive thing, and will then facilitate the property market to continue as it has been. And the highs we saw in June this year, followed by a bit of a fall off in the weeks preceding this in July. We're now, as we move through September and into October, the market is now on an upward curve again.
I think what's important to acknowledge, especially for all of you in the Isle of Man, Guernsey, Jersey, Gibraltar, Luxembourg and Geneva, or maybe placed in Manchester or Leeds in the south, different parts of the country, London is super busy now. The streets are filled up, the students are back, and there's a real buzz and vibe. And this hasn't been seen obviously since pre-COVID, and that feel-good factor and that energy and that the streets are alive, the shops are alive, bars reopening, and new restaurants are opening, and there's just so much good energy and life out there. And I know some of you have been asking me, what's it like out there? It is busy, and it feels very, very normal, and that only creates a feel-good factor that kicks into all the markets, especially the retail and hospitality that have been trading extremely well on the back of that, and long may it continue to what we expect to be a really positive, strong Christmas period for those retailers and hospitality after missing out on all of the events last year. And I think we're already planning our MJ Christmas event for this year, and I think many companies and many businesses that missed out last year were saying, we want to go big this year, or we want to celebrate being with our team and embracing our colleagues and enjoying spending time with each other. I think everyone is looking forward to that.
Yeah, definitely. I mean, for those industries where there's not sort of awards ceremonies and evenings which they go to, the sort of seasonal Christmas party is sort of the main social gathering of the year, especially in the property sector. A lot of surveyors don't work in an office; they've been home based. So I think this year could be such an improvement on last year. We sort of really get people together.
Brilliant. What other news you got to share this week, James?
Well, in terms of the built environment, down the road in Mayfair, there's been planning permission granted at the Ritz for a £300 million 5-storey basement excavation at the hotel, which will seek to move it onto a new level of the hotel. It will be comprising some new leisure facilities there. There's also going to be an extension of the hotel to the building opposite. There's a 70s office building on Arlington Road which is being demolished, which will include 53 new rooms at the Ritz Hotel just on Piccadilly. This follows the sale of the hotel last year in March, which sort of went under the radar somewhat, selling for around 800 million to the Qatari investment group. So that'll be one which will be undertaken, and the hotel will apparently remain open. So that'll be pretty groundbreaking. It's going to mimic that which Claridge's have done recently in their 33-metre deep basement excavation, which again 5 stories deep on Brook Street in the heart of Mayfair. That development also will include a roof extension at Claridge's, so there's going to be a full floor plate super suite there. It's going to be charged out a reported £50,000 a night, so a super suite there. It's going to be that's going to be one of the sort of landmark suites in London. So
yeah, such an interesting space, and let's see what the Dorchester and Park Lane Hilton, the Savoy, I know the Melia, White House did a fit out. They're all going to have to up their game as the super hotel space reaches new heights and new levels or new depths.
That's it. We'll see what the other hotels, their main competitors, what their reaction is to that. Across the UK, and especially in London, the past few weeks, we've had Insulate Britain. They've continued to disrupt the road network here, mainly in sort of the main transport hubs of London. And I know many of those which have been arrested, the demonstrators, have then been released and continue to demonstrate thereafter, causing sort of major hold-ups, generally in the morning rush hour times. The Home Secretary, Priti Patel, has announced some tougher punishments to try and tackle these protests, which will include the government plans to criminalise the interference on key infrastructure such as the roads and the railways, which their current methods of protesting being so disruptive to to the logistics, transport, people going to work. And on that note, job vacancies, we said last week we're at record levels of job vacancies here in the UK. And just some news out of London, the taxi firm Uber has announced 9,000 more drivers they're looking for here in London, which is part of a larger recruitment scheme across the UK, whereby they're looking to recruit a total of 20,000 new drivers there. So that
I think we reported on that last week. Speaking to all the black taxi drivers and the Uber drivers, I always like to get an understanding of what their levels are, to understand how busy they are, to know that tourists are here, to know that there's more movement. And there's been a real shortage over the last 4 weeks of taxi drivers and Uber drivers, and I think there is now the demand and return for that. So great that those jobs are coming in, and also because I'm sure many of you that have been Ubering or taxiing around that have been challenged in the times and that you've had to wait or the availability. So I think great job news there, and I think much needed and a great boost.
Definitely. And then just in terms of the fuel crisis here, it continues to present a bit an issue across the UK, both in terms of households domestically, for those businesses across the UK who do require regular vehicular transport to get to and from work, for the transporting of their own goods, tools for those that work in skilled labour. Prices are currently predicted to continue rising as we are at the moment, with a peak forecast for that sort of December festive period, which, coupled with the rising energy prices at the moment, makes for some quite bleak reading for the UK as we move through autumn into winter. So hopefully those, we get some more HGV drivers into the UK on those temporary work permits, and there's more getting trained up and people looking to move into that industry, because it's not something you can unlock overnight. There's sort of training and new entrants to that sector.
I think with price rises, energy price rises and general price rises across the board, that goes hand in hand with inflation and inflationary pressures that we're currently seeing, and it is expected that wage growth goes in that direction as well. It's quite normal when you come out of something like a pandemic or an economic downturn. And what's historically been the case is that real estate, both commercial and residential, is one of the asset classes that investors are very much attracted to during high inflationary periods. So if that trend continues, I do expect for a lot of money to go into real estate, both commercially and residentially, because your savvy and serial investors know that that's where they're going to see growth in such inflationary conditions.
Definitely, and as property prices continue to rise, we're at around sort of some of the house price indices predicting 10% on an annual rise. That's obviously wages are not going to be at a 10% annual rise. There's that affordability gap, which is, pressures the housing industry and as a sector, and pressures to just build more houses here in the UK, as they're trying to sanction with planning reforms here in the UK. So we'll have to keep an eye on that and see how that progresses.
Anything else this week, James?
Just in terms of some mortgage rates, wanted to bring you some news there. Competitive mortgage rates has moved into the buy-to-let sector now, with two lenders offering rates in the region of 1%. So the first one, the Mortgage Works, which is Nationwide's buy-to-let arm, has launched a loan with a record low rate of 0.99%, which is the lowest ever buy-to-let mortgage available. It's available on 2-year fixed rates. It's only available to landlords with at least a 35% deposit. However, the arrangement fee on this is 2% of the loan amount. So for those making or wishing to take out a larger mortgage, it's going to be slightly uncompetitive against some of the other buy-to-let mortgages in the market. The competitor to this on the low buy-to-let mortgage rate is Platform, which is an arm of the cooperative banking group, which has launched a buy-to-let mortgage with a 1% on the nose rate. So it's a 2-year fixed, available for landlords with a 40% deposit, and comes with an arrangement fee of £2,450. So two, record low buy-to-let mortgage products there. It's been largely centred around the owner-occupier domestic market, that sort of price war amongst the lenders, which again this week Platform has made sort of inroads into the market, that cooperative banking group arm, and it's currently offering its cheapest deal on a 2-year fixed for an owner-occupier mortgage, 0.79%, an arrangement fee of just under £1,500, an LTV, so you have to be a 60% LTV or less. That obviously beats Halifax's 0.83%, which was the market leader prior to that. So that price war, Rob, is continuing week on week. I'm not sure how much lower we can go at the moment than 0.79%.
Race to the bottom, James, race to the bottom.
Yeah, so I think that could continue, just nip and tuck until we have an interest rate rise. So we could see that beaten in the coming months. We'll have to keep a lookout, wait and see.
Absolutely. Brilliant, James. Great info, great intel as always. Thank you so much for all your amazing support, everyone listening. Hope you're all well, hope you're all safe. Getting around to see all of you one by one, and I'm loving that. And looking forward to seeing you all again. Keep following YouTube, LinkedIn, all of the socials, the podcast, and reach out and feel free to contact us whenever. Take care, everyone. Have a great week or weekend, and we'll see you all next week. Take care.
Thanks so much, everyone.
Thanks, James.